special guest, and her name is Karen Hall. Karen is the Business Development Manager for Entrust Financial Services. Entrust Financial Services provide financial assistance to members and to the public like ourselves on making the best of our self-directed IRA. Karen Hall is a native of California and a member of RIAC, which is just great. It's good to always have our own people to get up and tell us what they do. She's a mother of two. She lives here in Orange County. Karen has over 16 years of experience in real estate, property management, and mortgage lending. She has worked with a lot of different companies such as Bank of America, Syntex Homes, Palute Homes, and for her own company, Caring for Mortgages. Karen is a master network speaker and a great public speaker who specializes in self-directed IRAs. So please, let's give Karen a warm welcome.
Thank you so much. I really appreciate that. I hate to tell you that my name is Karen. Think of it as Karen with an attitude. You know, it's double A. I didn't do that to my children, though they have normal names. Thanks very much for letting me speak today. I'm really excited to talk to you about self-directed IRAs. As Connie was saying, I work for Entrust. Entrust is the oldest and largest provider of self-directed IRAs in the country. We're in our 28th year providing this service. So it's when you hear about what you can do with an IRA, a lot of people say to me, is this something new? You know, is this something they just came up with? But no, you've been able to self-direct an IRA for over 30 years. So basically, what's a self-directed IRA? I think everyone knows what an IRA is. Self-directed, all it means is you can put whatever asset you want into an IRA, except for insurance, life insurance, and collectibles. So just think of an IRA as a shell, and today it may hold a mutual fund, which may not be holding its value. Tomorrow it could be holding a piece of commercial real estate. Or, you know, I was just taking a look here at one of the flyers in the back. Here's this lovely $4 million piece of raw land, which I thought you can buy this with your IRA. You can buy raw land with your IRA. Of course, if it's $4 million, a lot of people's IRAs aren't that high. I think the average is about $70,000. So if you've got a piece of land that's this much and you want to buy it, fractional ownership is great. Creating a real estate syndication is great. In fact, on February 6th, I'm going to be having a free event at lunchtime talking about, with an attorney and a CPA, talking about creating real estate syndication so that you can pull your IRAs together and purchase larger pieces of property. But basically, let's just give a little disclaimer here. Entrust, as I said, we're a third-party administrator, so we're not here to provide tax advice. We have plenty, I think we have CPAs in the room. I know we have at least one CPA in the room, and we're not here to give legal advice, but we're here to talk to you about how you can self-direct. And we do partner with a lot of attorneys and CPAs because this gets into IRS tax code and so forth, but we don't have to go there today about the code. Only to say a few things. I mentioned that you can invest in anything except life insurance that are collectibles, and that just makes the scope it's just wide open. You can invest in things like I said, raw land, pre-developed land, commercial property. As long as it's for investment purposes, you can get maybe a fourplex, as long as you only have personal use of that property, not as a vacation home. And frankly, you're not even allowed to go paint it. Do you love it? The IRS taxes you. They tax you when you die, and if you go paint the property your IRA owns, they call it sweat equity, so they'll tax you when you sweat even. So an over-contribution of sweat equity is not allowed. But if your IRA owns a piece of real estate, then you can be acting as a general contractor and have that property worked on and so forth and brought up to speed. So some of the things you can't do, we'll talk about a few of the things you can't. Those are called prohibited transactions, and you figure with the IRS there are a couple of these rules. But they keep it pretty broad and subject to interpretation. What you can't do in an IRA is deal with anybody. You think of it, your lineal descendants, your parents, your grandparents, your kids, your grandkids, and their spouses, yourself and your spouse, are disallowed to the transaction. So your IRA has, say you have $100,000 in there, and you've got a deal you want to buy, you want to pitch in, buy this piece of property that your mom owns. You can't, disallowed. A piece of property you presently own, you can't put a property you currently own in your IRA, it's disallowed. But there are some exceptions to the rule. If you find a piece of property that no one disallowed owns presently, you can partner with that person, say, for example, you and your spouse, or even you and yourself, you can partner with your IRA to buy that property, so long as you close